Good morning, it's Monday the 9th of January. Welcome to this first Phoenix Blue update of 2017, presented this morning by Tom Colley. First thing to say is Happy New Year to everybody. I hope everybody's had a great break and is coming back to the markets refreshed and ready to trade and make some pips hopefully this year. Okay, we've had last year we set out at this time of year and we were anticipating the dollar dominating the market because of a divergence in central bank policy, being the Fed raising rates when the rest of the world were reducing rates or bringing in other measures to soften their currencies. That didn't really play out in total last year. We finally got a rate rise in December from the Fed, but going forward into this year, we appear to be in the same position as we were at the beginning of last year. We're anticipating a year, certainly an early part of the year, dominated by dollar strength. We do have that central bank divergence in place again. The Fed seem more committed to further rate rises. Inflation has started to raise at last, certainly in the US, which has the potential to drive those interest rates higher. In addition, we have the Trump effect. The new president's inauguration is on the 20th of January, and traditionally we look at the first 100 days of a new president to give a picture of how he will work during the full term. Now we'll see, the anticipation is we're going to see stimulus in the form of infrastructure building, etc., etc., all of which should drive the dollar to the long side, and we should see that should in principle see rate rises coming from the Fed, so that divergence plays through. So as I said, we're somewhat the same as we were last year, although we have the Trump effect in addition, looking to move the market. Obviously, there's a number of other things around the world like Brexit and other EU issues which also play into that scenario. Okay, but before we look at the opening charts of the year, let's just have a look at the news. Now, the news last week, really all I'm interested in is the non-farm payroll on Friday. Now, the numbers came in at 156k, below a forecast of 175, which on the surface appears disappointing, but there are a number of other key facts in this. The first of which, I put that box in the wrong place, sorry, above there, is the November non-farm payroll figures were revised to 204k from 178k. So the November figures, which weren't sparkling, now retrospectively do look a lot stronger and are up around where they were forecast back in November rather than coming in below. Critically, I think this rate is also above 150k, which we were talking about as being a significant level, and that the markets pre-Christmas would be happy with that sort of level on an ongoing basis. Then in addition, we had hourly earnings at 0.4% over a forecast of 0.3%, which already was a substantial increase over what we'd seen the previous month. So very strong numbers coming in there, and they were in fact the strongest since 2009. So those did that net effect, not just this one thing in isolation, brought the dollar bulls back into the market on Friday afternoon, and we did see a return to dollar strength, having seen somewhat of a sell-off from the Christmas highs. Okay, going forward to today, and there isn't a great deal of news this week as a whole. Caution, we had a bank holiday in Japan overnight, so be aware of a lack of liquidity that have been in relative markets because of that. And then overnight tonight, we have Aussie retail sales and the CPI from China. But that is it for Monday and Tuesday of this week. So a steady week to let the markets come back to full liquidity without potentially anything dramatic happening. Okay, over to the charts. Start on the dollar index, and this is the weekly chart. What we saw through last year really was we saw somewhat of a range within this zone through here until we got the Trump election, and this is the week of the election, the 8th of December, sorry, the 8th of November. We saw dollar weakness into the surprise election result, and then we saw dollar strength back into the new highs through to the end of the year. We subsequently saw a pullback, and that's a nice pullback right into the trend line I've got here drawn on the weekly. We might see a more significant pullback to these previous highs here. That would potentially be the nicest thing to see, because we would then have a cleaner move to go forward, having taken out some of the momentum to the upside. We can't guarantee that will be the case, but we'll be watching that. In the meantime, we'll remain bullish the dollar as long as we remain above this level, around $100. Over on the yen, and again we've got a weekly chart. The reason for this is we're at a significant level at the moment. We can see resistance here. We've got horizontal resistance. We've also got trend line resistance. In addition, we actually have a commitment of traders signal here. But as you can see through the movement of the dollar last week, the sell-off and then non-farm payroll, we have seen weakness in the yen again. And what we're really looking for in this market is we're looking for the dollar strength to play out in a break above these two support levels, above the previous highs, before pulling back to the level and take that to the long side. That will then invalidate the commitment of traders signal, but our rules on those COT signals are if and when they are ignored, we can look to trade to the next significant level. We're assuming that signal is still in place. We trade to the against the COT short there, so we trade that to the long side up to this next significant level here at around the 120s, 119s. Over on the euro, and we're back to a daily chart here. On Friday, we saw that dollar strength come back in on the back of the non-farm figures. Some of us got in short through here on an intraday move after that data came out. We will be looking again to the short side here, so we'll be looking for opportunities to add back in a return to this level here. Alternatively, if price pulls back with the dollar, we've got another level waiting here. We've got a commitment of traders short signal, a significant horizontal level, and the lower trend line in that channel there to take a trade around the 1.07 if that was to pull back further. Alternatively, as I've already said, we're looking for shorter term trades back down to this low here. However, depending on what's happening, we may look to hold those trades beyond that low at that point. Over on the Swissy, what's interesting about the Swissy is in the period pre-Christmas, we had a commitment of traders short signal, which is marked by this blue box here. Now, without the market significantly correcting, that signal has gone. That means that, and this is the commercials from the futures market, they have reached an extreme position. They then allowed that to dissipate. And the only way we can read that is that price has now pushed through that. Yes, it's come back and pulled back, but unless that commitment of traders signal reappears, which it hasn't done over the weekend, we see no reason for more long side and Swissy weakness in this market. Really, though, because there aren't any very clean levels through here, we are looking for a break above this zone for a pullback before we take that to the long side. But the significant factor is, as I've said, that commitment of traders short signal is no longer in place, despite the market not having corrected. So that's an interesting signal and is another thing that's pointing towards continued dollar strength in the early part of the year. Okay, over on the pound, well, we've already seen a significant move to the short side following Friday's move to the short side in this morning's early trading. We're below this level here. We will be looking for price to close on a daily basis below this level to pull back before we take a trade. Well, we'll be looking certainly to have most of our money off the table before this next support level through here at about 1.21. Other than that, this market does have potential downside. There's a lot of uncertainty. The reality of Brexit is about to dawn. We've got Article 50, which is due to be signed before the end of the first quarter. That's the official announcement that the UK will be leaving the euro. Sorry, not the EEC, not the euro. And at the moment, we've seen, or post that the election result, which is this part here, we saw somewhat of a recovery. We have seen some nice data out, but I think the market's beginning to accept that's only short-term data, as we've got a weak pound offering good exports as an example, simply because we still have access to the open market, and UK goods are cheaper than they were previously, creating demand and therefore producing good data on that basis. The Aussie is another market that we got in short on the dollar strength after Friday's non-farm payroll. We can clearly see we're at a level here of I think the level that we traded from was 7,330. We've had quite a bullish move back this morning, so we will be looking for opportunities for this market to double top on a lower time frame and still to trade down to this level at about the 7,100, 7,150. We do have a commitment of traders, extreme signal for long there, so we'll be looking to take early monies out of the trade in the intervening period and take all our profit out of the trade if it reaches it at that point. There is potential, if we do see dollar strength, for that commitment of traders signal to either have dissipated by that point or for it to be ignored so we can take trades further to the downside. We do have longer targets to that, but that commitment of traders signal at this moment in time is a heads up that we want to be careful at that point. We can see it's a significant horizontal level at the same point, so we'll be watching to see how that develops on new COT data at the weekend. Okay, guys, so basically it's dollar strength we're looking at. We're going to be cautious this week. Most of our market cap orders will be taken with price action rather than 40 pip stops. We still see a lack of liquidity, and we may see some uncertainty in the market until we get Trump actually in the White House and see some reactions, or to see what he intends to do and how quickly he intends to do those things, and if those things relate to what the market has interpreted since the election on the 8th of November. Okay, guys, so let's look forward to a great year's trading in 2017. We'll be here every trading morning with the update. So please sign up to the YouTube channel and you'll get an email when it's actually been released and ready to view. Okay, take care, thank you and goodbye.